We continue where we left off in the previous video. So now with transaction number 9, it says on the 12th of January, Smart Concepts paid a service provider $750 for internet access. So we paid, we know that the bank account is involved, which is an asset to the business. We made a payment, so the bank account is decreasing with $750. We paid for internet access. If you call the account internet access or internet expense, those are fine. We know it falls under owner's equity, and expenses decrease owner's equity. If we had to say an expense here, then it's of course increasing. Keep that in mind, please. Because the more expenses increase, the more owner's equity decreases. So depending on which classification you use, you need to ensure that you use the correct sign. Let's look at transaction number 10. It says on the 25th of January, Smart Concepts sold 15 computers on credit to a customer for 12,500 Rand each. An amount of 125 is due by the 15th of March and the balance by April. So now with transaction 10, we made a sale, so we call that account sales, and that's an income to the business. Income increases owner's equity, and we have to say 12,500, that's how much we sold it for, multiplied by the 15 that we sold. Now we ask ourselves, how did we sell the computers? Did we sell it for cash or on credit? It says there that we sold it on credit to a customer, which means they owe us. When they owe us, we call it accounts receivable. Accounts receivable is an asset to the business, increasing because they owe us more, and that's 187,000. Then we still have another part of this transaction. So the first part is to record the sale. The second part is to record the use of the inventory. So my inventory account is there. Why is my inventory account there? Because I sold off my inventory. So what's happening to my inventory? It would decrease. But remember, your inventory decreases by how much you paid for it. So we have to go back and look how much did we pay for this inventory. We paid 10,000 Rand. Remember, we sold it for 12,000 because we buy it and then we sell it, and when we sell, we of course have to make a profit. So the costs are going to be different. So we always record the inventory at the cost we purchased it for. So we sold 12 computers, so we say 15 computers, 15 multiplied by 10,000 because that's how much we paid for it. And when we use of an asset, what does it become? And our expense here is cost of sales. Remember what I said above? If I say expenses, I increase expenses because the more expenses increase, the more owner's equity decreases. 150,000. We go to transaction number 11. It says on the 1st of February, Smart Concepts employed a computer technician at a salary of 8,000 Rand per month. So transaction 11, I say no entry. Remember what we said previously? We employed the computer technician. Did we pay the salary? No. Did the computer technician work for us? No. So there's no business transaction that occurred, so therefore the transaction is no entry. Let's look at transaction 12. Transaction 12, it says on the 8th of February, Smart Concepts paid 7,000 Rand for an advertisement in the newspaper advertising the computers available for sale. Keyword there, it says we paid. So what do we know when it says paid? Which account is involved? Bank. We paid, so the bank account is decreasing with an amount of 7,000. We paid for advertising, and advertising is of course an expense account. Expenses increasing because we paid. The more expenses increase, the more owner's equity decreases. Right? Then the next one, it says transaction 13. On the 12th of February, Smart Concepts sold 3 computers to customers for 12,500 each. The customers paid cash for them. Remember what we said, when we sell, we need to know if we sold for cash or on credit. Let's do transaction 13. And we say we sold, so the first account is sales, which is an income account increasing. It says we sold 30 computers at 12,500. We now say the sale that we made, was it for cash or on credit? The transaction said cash, so we know the bank account is involved. We're receiving money, so the bank account is going to increase. Remember what we said with the sale? We record our inventory, which is an asset. We sold our inventory, so our inventory is decreasing. And what did we say? When we record the inventory, we're looking at how much we paid for it. So we sold 30 computers and we paid 10,000 rand for it. Every year we sold 30 computers for 12,000. We're decreasing our inventory by the 30 computers at 10,000. And then we have our cost of sales. An expense account under owner's equity of 300,000. Remember, the more expenses increase, the more owner's equity decreases. Now we can see that the sales is 375, the cost of sales is 300,000. So of course we know we made a profit of 75,000. So that's how we determine our profit. Then on the transaction 14, it says on the 25th of February, Smart Concepts received cash of 48,000 in respect of technical support contracts taken out by customers. The contracts are for a 2-year period. So we received 48,000 rand. That's the first part. Remember, at least identify the first account. We know the first account is bank because we received money. Bank is increasing with 48,000. Now it says that we received 48,000 in respect of technical support contracts taken up by customers, which means we're going to provide a service to the customers. The contracts are for a 2-year period. So we receive the money and the customers want us to provide technical support. If anything goes wrong with their PCs, they want us to be able to come out, service the PCs, and then sort out the problems. So they paid us 48,000 rand to provide the service for 2 years. Yeah, the 2-year contract. Question is, did we provide the service yet? The answer is no. We haven't provided the service yet. We received the money though. So what does that mean? We owe them the service. And in this case, we call the account income received in advance. Because we receive the money, but we have not provided the service. So we owe them the service. And when we owe something, we classify it as a liability. So my liabilities is going to increase with 48,000 rand. Then transaction number 15, it says on the 12th of February, Smart Concepts paid the computer technician his salary. So now we can see on transaction number 11, we employed the technician. On transaction 28, now we're actually paying the technician his salary because now he worked for the business. So we made a payment, so we know the account is bank. Assets decreasing with 8,000. We have the salaries and wages account, the salaries account, and expense to the business increasing 8,000. Remember, the more expenses increase, the more owner's equity decreases. The remainder of the transactions are quite similar in nature, except now we're going to receive money. I want you to work through the transactions up until the end, which is transaction 29. In the next video, we'll now be taking these transactions which we've recorded and putting it into the accounting equation.